live, Michael. How are you doing today?
Good morning, everybody. I am doing awesome. How are you doing today, Martin?
Doing great as well. Thank you very much.
Do we have anybody watching with us yet? What are we doing?
Soon. People are always, taking some time to come, but
Taking some time to come?
soon.
Well, let's welcome everybody here. Hello, everybody, and welcome to AGTP Daily. We go live, as you know, every weekday at 11 a.m. Eastern Time to discuss the most important tech stories, tech events, tech everything in the United States of America. I'm going to get this right today. Today is Monday, the 22nd of June, 2026. Let's get right to it. We have some interesting stuff to go over today. AI, whether it's Anthropic or OpenAI, or frankly, any of the other companies that are in this side of large AI space are kind of entering an institutional phase. They're way past the startup phase. There's way too much money there. We'll get to that as well. Google Gemini's Noam Shazeer joins OpenAI. We'll talk about why he would possibly do that and what it means actually for the rest of the industry. And we wanted to cover this a little bit on our last show, but Google is also building an AI chip business. They've kind of been dabbling in it a little bit, but I wanted to dig into this a little bit more. Okay, let's talk about why we feel like we're entering an institutional phase for some of these big AI companies. Look, we talked about this. OpenAI and Anthropic are starting to move out of the private market hype cycle, as I said, and into a world where public investors will eventually get to see their numbers. And that's why this matters. When we talk about institutional, we mean they're no longer going to be these private companies where they kind of tell you the numbers that they want to tell you and they don't tell you the numbers that they don't want to tell you. But here's the thing. SpaceX went public, 5 days ago, Martin? 6 days ago now?
6 days ago, I think, yeah. Friday,
something like that.
not last week, the one before.
Thursday, I think went public on Thursday, started trading on Friday. As always, I want to see, where's it trading right now? Well, Martin, have you looked at it today?
No, I did not. What's the
Don't
price?
look.
What's the
Don't
price?
look.
It's down, I'm sure. If you say that,
Would I
it
be
means
this
down.
happy if it were up?
So the cursor guy were getting the average price of the first 7 days of trading. So which means it's up until
but again,
tomorrow
they're
night.
screwed either way. Excuse my language, right? Because the higher anything above the IPO price,
Yeah,
and they should be mad.
yeah.
But
I think
I
they
want
knew,
the reason why I'm bringing this up more today is, again, not because I really care about SpaceX's price.
Yeah.
Because I want to put it in the context of, we want to talk about the institutionalization of OpenAI, because that's what we're talking about here, right? These headlines where it says AI is entering its institutional phase is really talking about OpenAI and Anthropic, because they're the two biggest companies with the most impact in the United States, right? And that's what we're talking about here, US. But 167.84, down 9.27%. And if you go back and you look at the 5-day chart, it just looks what we would have called on the trading desk as fugly.
Okay, what does fugly mean?
What would the F possibly stand for that you can't say out loud on a family show?
Okay.
And then add ugly to it.
Okay.
So think of the fugly part, think of the F part as an adjective describing the word ugly.
Okay, fair enough. I got it.
Are you with me?
Got it.
This stock performance is fugly. Anyway.
Fugly. Okay. It's an interesting way to put it.
But it's nicer than what you might otherwise say. Look, we know that OpenAI and we know that Anthropic also, they say confidentially, but how confidential can it be if everybody knows about it? They filed an S1 with the SEC, the Securities and Exchange Commission. This doesn't force them to go public, but it gives them the option to go public, right, Martin?
Yes.
And even though the companies say there's no final timeline on this, right, both these companies have kind of done the same thing. And now that SpaceX has gone public, we talked about this on Friday. Are we in a window? And I feel like we are in a window. And I feel like that window is just slowly closing. It's like the end of summer and middle of fall, kind of the window's closing. It's going to turn into winter, and then boom, the window's going to be closed, and you have no heat inside the house. Is what I feel like is going to happen here to some of these companies if they don't go public soon. And look, we did say, Martin, and we are on tape, we are on the videotape saying that what's going to be the behavior of the SpaceX stock. What did I say exactly?
Yeah, I think you've done a really, really good job since the IPO to analyze the stock and to explain from a stock market perspective, right? And I mean, we had 3 or 4 episodes, I think, now that you've been, giving insight and explaining what's going on and explaining everything, right? So
yeah.
Yep, For sure. Maybe we should do like a summary at some point, But for everybody who's following the show, you definitely have learned a lot of information from Michael, and now it should not surprise you what's going on because
No,
Michael
no, the
gave us a
performance
lot
here
of
should not
information.
surprise anybody because this is exactly what we said was going to happen. Unless this thing
Yep.
rallies to like 250 today, it's not going to make any sense. Anyway, look, the fact here is that building. So I want to get back started to this institutionalization thing, right?
Okay, yeah.
Why does it matter to me? Because Anthropic and OpenAI are two of the most important AI companies in the United States, and it looks like they're preparing for their kind of next level of capital needs. So what does that mean? It means that they can raise from the private markets all they want for now.
Mhm.
But at some point, once you get past like Series C, D, and E, excuse me, you're going to have to be in a position where like now you're going to have to start releasing sort of your financial statements, because no one's going to give you more money if they don't think there's going to be some upside. Remember, we talked about this in the context of SpaceX's IPO, and that was it had to be at $1.75 trillion because everybody else who invested earlier wanted to get their money back. And that's why when we talked about OpenAI filing and even Anthropic filing, both of them essentially raised their last round at $1 trillion. Yeah.
Yeah.
Essentially 900 and something odd billion dollars, but let's just call it $1 trillion because it's easier. So they cannot list at $1 trillion.
Impossible. Yeah. And plus, like you really like rightly say, also I think that like the last round may be some quick money for the investors, right?
That's it. It's a flip. It's a flip.
Like
That's it.
It's just a flip, and they may also have sold it internally, right? Like going to the investor and saying,
Completely.
"Look, guys, like you invest right now, we IPO by the end of the year. We are trying to push really, really hard to get the highest IPO price, but it's a quick flip for you, right?" And
But Martin, sometimes these rounds, right? Like the round that's right there that we talked about, the 122 round. And remember, people were begging Anthropic to raise more money.
yes,
Anthropic wasn't begging them to give them money. So why would they do that? They were begging them to take more money because they wanted to make more money on the IPO.
and makes ton of sense, right? I think it makes ton of sense. I mean, the timeline for me is crystal clear.
Yeah, for you, right? So
Yes.
so that's the thing, right? Is that this is the reason why, and this is going to actually merge really nicely or morph really nicely into our conversation about Noam Shazeer and why is he joining. But the point here is this, and that is that these IPOs need to, for both Anthropic and for OpenAI, need to be above $1 trillion, because the only reason why OpenAI raised $122 billion was because people were begging to give it money so they could double or triple their money on the IPO, and the same thing with Anthropic. Okay, having said that though, here's the thing. To get more money later, right? So first of all, to do the IPO, they need to go public. But once you file with the SEC, you're gonna have to now start releasing all of your financial information. We talked about this too. I don't know why anybody really wants to be a public company, except for the money. Do you know what I mean? Except for the capital gains.
So
Because running sorry, go ahead.
Capital gains in terms of I sell my share, so I exit, right? Not in terms of fundraising.
No, not in terms of fundraising, just in the capital gains. In other words, like why would a company like OpenAI go public if it could continue to raise money in the private markets at whatever valuation it wants, but it can't, because at this level, at $1 trillion, it now needs to sort of jam the stock down the throats of some institutional investors that just like feel like they have FOMO. Look, just because you're an institutional investor doesn't mean you're the smartest investor in the world. And secondly, remember, $25 billion, I think, was the amount of money that that individual investors tried to invest in the IPO for SpaceX. So there's a ton of money to be made by telling individual investors, "Hey, this thing's gonna be a rocket ship," no pun intended, for SpaceX, and they'll do the same thing for OpenAI and for Anthropic. But here's the thing, and I was thinking about this actually today as well. Building this frontier AI stuff is really expensive. You know, they talk about model training, Martin, like it's like one thing. You know, like it's like training a dog. Teach it how to sit, teach it how to give you its paw, teach it how to roll over, and you're done. Like now it knows how to do all that stuff. No more training necessary. Bring it home from obedience school. We did this with Jazz. Bring it home from obedience school, and then you can like play little tricks. Jazzy, give me your paw. Jazzy, sit down. Jazzy, roll over, and it all works. And everybody thinks Jazzy's a genius. But for frontier models, the training never stops.
Okay.
And the bigger the model is, the more expensive it gets. But you know this, right? Like, this is not new information to you. But if you think about it, the training of a frontier lab model never stops, because every day more information is created, more writing gets done, more research gets done in every topic. So if you're building one of these sort of monolithic LLMs, you can't say like, okay, it's trained.
And then
Because
done.
then done, it's not, because now it's Tuesday. So the training is like one of the most expensive parts of this. It's also one of the most compute expensive parts of it. So it gets more and more expensive every time you need to train it. You know what's not really expensive to build?
Tell me.
Orchestration.
It's very cheap, actually. Really, really cheap. Especially now that actually the models themselves, they can build the orchestrator much cheaper.
But you understand the point is that, like, it's never going to be inexpensive. Not never, but at least in the current way these models are trained, it's not going to be inexpensive to train these models. So they're always going to have a voracious desire for capital, unless the cost of compute goes down and the cost of chips go down. But the more demand there is for it, just the higher it's going to be. Even if it stays at equilibrium, even if it stays right here, it's still very expensive. Okay? And they don't just need money for training. They need money for talent. They got to hire people, and we'll get to that later.
Yes. Yeah.
But they also need infrastructure, massive amounts of infrastructure.
Huge. Because they need to both train the models and then provide the access to the model through the cloud, right? So they need like twice more infrastructure. Yep.
And, you know, I mean, I can go on and on, but they need data centers. They need to do more research, because they're not satisfied like that the model that they have is the only model that they're going to ever have.
Yep.
And then imagine training a new type of model from scratch. So it's just really expensive. And private money has kind of got them really, really far. But it's not going to be enough forever. And the private money gets impatient.
Yeah, true. They want to exit.
Well, because, but again, you have to understand the way the private money works. Like, again, it's all coming out of VCs for the most part. But even though they're not looking at it as venture style investing, right, with a Series A for 100 million, a Series B for 75, it's not like that. Excuse me, it's more like this sort of nation state style investing that we've been talking about for months now, right?
Yeah.
But at some point they get like, okay, these numbers are getting way too big for me. And if I don't cash out now, my fund is going to get crushed. So imagine the guys that put money in, paying $122 billion at a $965 billion valuation for OpenAI. That money comes out of a venture capital fund where they've raised money from limited partners. Right? And those limited partners actually got some of their money from other investors. And all of them are impatient. And as it's like climbing Mount Everest. The higher you get to the peak, the scarier it gets, because there's less oxygen up there. And the higher you get, the faster you want to go. You're like, can we just summit and get out of here? You're laughing, but that's kind of what it feels like, right? Because if you invest $5 billion in a company with a $100 billion valuation, you're like, okay, $100 billion. There are plenty of companies trading at $4 trillion or $1.5 trillion or $2 trillion. So like, we're far away from whatever that peak is. But a company that has no profit, no path to profit, that you've now invested in with a valuation of $1 trillion, you're going to start to get a little impatient. Like, how do you sleep at night? Because you're like, what could it possibly be worth? And then you watch SpaceX go public.
1.75.
But yeah, 1.75, like, let's go public tomorrow. But wait, we can't do it yet because the money has to sort of wash itself out of this investment. It went from 135. It traded as high as, I'm just looking at the chart here. Okay, 200. I think it was higher than that at some point. And now it's 167. It's bouncing around there. So it's $33 off its high. And I'm doubtful, at least in the next week, that it's going to get back up to $200. Because there are more people in the SpaceX universe that are impatient as well. And they're like, uh-oh, I didn't sell at 200. I didn't sell at 190. It looks like it's going back down to the IPO price. What am I doing? I bought during the IPO. Do you know what I mean? So what is the message that it's sending here to companies like OpenAI and to Anthropic? Here's the thing. So the reporting out there says that OpenAI is thinking about a valuation that could reach $1 trillion. You know what I'm calling massive amounts of balderdash. That's the right word for that, right? Balderdash? I don't know if that's a real word, but maybe I just made it up. But I think that's way too low. Okay,
Yeah,
we
no,
know
that's
that we
way
know
too
the
low,
date
yeah,
on
yeah.
this, but again, for people that are listening for the first time,
They can't do 1 trillion. That was
I
the
can't.
last. That was the last fundraising, right? Like
You
so.
can't. It's not
Just
possible because no
chance.
one's going to
No.
make enough. I mean, the most recent people are the people that have the highest risk, and they're and they didn't think they had that much risk as well, right? Because theoretically, at least at the beginning, the people that invest, when there's nothing, those people have the most risk because it could remain nothing.
Yeah.
The pre-IPO money in a normal world is easy money to make because you kind of know where it's going to trade on the IPO. And as long as you're making 25, 30, 40%, you're probably happy.
So that leads us to like 1.2, 1.3, 1.5 maybe trillion minimum, right? Yeah.
But what was that? You never saw the movie Wall Street because
I
you
don't
weren't
think
born.
so.
You probably weren't even born.
Most likely.
But Gordon Gekko made an entire speech, and the whole theme of the speech was greed is good.
Okay.
But Wall Street participants are greedy. If SpaceX went at 1.75 trillion, what are we doing? OpenAI is thinking at 1.2 trillion. We have way more revenue than they do in our AI business. Twitter's a mess. X is a mess, right? As a money-making business. So why can't we be at least 1.75? But then the market's telling you, yeah, you can't be because this thing is also a mess. Anyway, the point is that we know that OpenAI has 900 million weekly users and 50 million subscribers. Like we know these numbers, right? But this is no longer about who can raise capital in the private markets. It's about who's going to raise money in the public market. And then what's going to happen to them, right? Because we can give you all the metrics that you want, but once these companies go public, they're going to have people are going to have to evaluate them not on what the potential is, but what the reality is. And I think that's what's happening here, partially with SpaceX, is that people are looking at it and going, they're not making any money.
I mean, it would be weird to do it like 4 days after the IPO rather than 4 days before the IPO, no?
Say again?
It would be weird to do that, like to realize that they're not making any money and that
Yeah,
they're
of course,
any revenue like just after the IPO when they had like plenty of time before the IPO to actually do it, no?
So we're gonna talk about two individuals in particular, and I want to get this guy's background again. Just give me 1 second. I did the work on it before.
Okay.
But there's a guy named John Jumper. He's leaving DeepMind at Google to work for Anthropic. Okay. So, and then we're going to do a bigger story on this guy, Noam Shazeer. But I think, and let's talk about John Jumper just for a second. He helped build AlphaFold, which is an example of AI creating real scientific value. He also shared the 2024 Nobel Prize in Chemistry. Okay, and AlphaFold's database now includes roughly 200 million predicted protein structures and has been used by more than 2 million researchers around the world. This dude is a bona fide scientist. But what else is he? Greedy.
You think?
But everybody's greedy. It's not like, you can't think about greedy as being mean.
Yeah.
I mean, if I said to you, he's the guy who just wants more, you wouldn't consider that bad, right?
Yeah, I see what you mean, yeah.
But I use the word greedy because it has kind of a negative connotation. I'm not saying there's anything bad about John Jumper. I'm sure he's a perfectly fine gentleman.
Yeah.
With a really nice family, and I'm sure he would give you his parking space if he thought you needed it more than he did. But why would he leave Google to go to Anthropic? Because we're going to have the same conversation about Noam Shazeer. Why? It's the institutionalization of all this. The answer is, again, it's a rhetorical question from me to you, but the question itself is not rhetorical. Why would he do it? Because he's probably getting allocated some shares. He's probably getting allocated some pre-IPO shares.
And that's the moment to move.
Well, yeah, but also think about when did they didn't call him yesterday and go like, hey, John, you want to work at Anthropic? And he's like, sure, I'm in.
Yeah, no, it's really like a multi-year thing, right? Like we've been talking about that for years, probably.
At least a year, probably, right? Because the guy is a Nobel-winning chemist. so he's very famous, and also he's built like some really useful artificial intelligence stuff as well. And I'm sure he gets paid very well at Google. Super well, right? You win a Nobel Prize and you're like building AI stuff at Google, you're probably making a ton of money. But are you making $3 million a year? Or are you going to get paid like a $75 million payout during an IPO? And I'm not saying he's going to make 75 million. I don't know what the deal is, right? But again, no one ever moves. Like I never switched jobs just for more responsibility.
Okay.
Okay. And a lot of the times, actually, I traded a shite company's stock. I almost swore, but I didn't do it for a better company's stock because I thought there was more upside in the better company. Right. So I traded Deutsche Securities, so Deutsche Bank stock, for Goldman Sachs stock. Can I tell you that I made the right trade?
Okay.
Can I tell you that it wasn't even close?
Yes, I think it was.
But that's one of the bets he's making. He's saying, I own all this Google stock, and for the stock that maybe a lot of it's vested, so he just owns it outright.
Yeah.
But who has more upside in the minds of someone like John Jumper or other sort of high-level employees? He's thinking, if Anthropic does what I think it's going to do, it's at the beginning of its cycle, not at the mid part of the end of its cycle, like Google is. Like Google could go higher, but the idea is that Anthropic's probably going to outperform if it does what people think it's going to do. But the market, sorry, go ahead. You were going to say something.
I mean, yeah, this is an interesting bet, right? Because I would make the exact opposite bet if it was me.
It would make more sense for me if I had been at Anthropic since the beginning.
And
I have vested shares because I've been there for more than 3 years. And those vested shares are probably worth who knows what if I was an early employee, 100 million, 200 million bucks. And then Google called me and said, want a real job? I would probably go take the real job, even if that's just for like $1 million a year, because I already have my hunch.
Yes. Yeah.
Right. But making the reverse trade to me is quite risky, particularly in the context of the fact that it's an IPO and he's probably going to have a lockup for 6 months.
Yeah.
And if maybe he gets allocated, maybe they said to him, look, we'll give you shares at our previous funding round, because that's where that stuff was marked to market.
Yeah.
You know what mark to market is, right? So that's likely what happened here. I don't know that for a fact, but what other price would they give him stock?
Yeah.
Do you know what I mean? Like I can't imagine some other price.
Yeah, that's the one that makes the most sense. Yeah.
Okay, so let's say they did that, but let's say then that the IPO market cools off a little bit because people watch SpaceX and they're like, okay, that thing didn't stay above its IPO price for that long. We're presuming, right? We don't know that. But if it doesn't, if it keeps doing what it's been doing for the last like 4 days or 3 days, it's just negative. So he's leaving, but he's leaving because he feels like if I go to Anthropic or if I go to OpenAI, we'll talk about Noam Shazeer as well, I'm going to make life-changing money for me and for my family. And that's going to be the payoff for my life's work. But it's risky, right? Because
it's probably first super risky, like crazy, absolutely super, super risky, or very short term. Maybe just go there for a year, and you just hope that in a year everything holds up, right?
But you remember, Martin, there are other examples of people leaving Google or leaving Apple or whatever, going to one of these frontier lab companies and going, oh, this is a
let's go back. There's plenty of this example, by the way, right? Like we
why would they do that?
We haven't seen much in the news like recently, but in March, in February, in April, they were like one every week almost, right? Can
I give you the perfect example of this? Goldman Sachs was the best run company I've ever worked for.
Okay.
It wasn't even close. I would have said that Morgan Stanley was close before, but once Morgan Stanley merged with like Dean Witter, it just became like a different company.
Okay.
But Goldman was really well run.
Okay.
And as soon as I left Goldman to go work somewhere else, I was like, that was the dumbest thing you've ever done. Like that was dumb.
It's not as organized, like everything is different, right?
No, and you always think like, oh, I'll make more money, I'll have more upside. But you lose a lot of things when you leave, and one of those things is just like the network that you have inside of Goldman Sachs.
Mm-hmm.
You know what I mean? And it's like in a way, it's like worse than getting divorced.
Yeah, I see what you mean. Yeah.
Because the people that you leave at Goldman, they're like, "What are you doing?"
Yeah.
Like you're not only do you think you're dumb, we think you're dumb,
Now we think you're dumb now.
and we're still here.
So is it like because I feel like you've talked about that a lot to me, at least. Like it was like a short-term gain, right? Like to leave Goldman, to go to another company, to make more money. But if you look at a longer lens, it would have probably been better to actually stay at Goldman.
He's
Like,
way better.
did I get that right?
Completely.
Okay. So
Completely, because the longer term returns would have been way better for me.
yes.
And it wasn't like I underperformed. I mean, I don't want to litigate this here, but it's like I way outperformed at my first job after Goldman Sachs, and they were like, "Yeah, we're not going to pay any more money." So it was just a bad idea. But the point is that these guys will see the same thing. They'll go from Google, which is a very institutionally well-run company,
yes.
and they're going to get to OpenAI, and it's going to be like,
yeah, it's an interesting.
you guys don't even know how to make burgers here in the canteen. Like, what are we doing? Even the cafeteria is terrible.
Yeah, no, it's true. It's true. And plus, like, it feels to me that there's way larger problems to solve and way larger opportunities when you work at Google. First of all, the only thing Anthropic has as a frontier model. If you want to build the next generation of AI, Google doesn't have one. So the first step is to reach the level of Anthropic, right? So there is more work there, right? Like you get to build the frontier model that is as good as Opus, as good as GPT 5.5. You need to be able to compete with them. So that's like challenge number one. Can we do that with the Google team? Then second challenge, like you have all the ecosystem of Google, you have all the data centers, you have all the next generation of AI, and also the third topic that we are going to talk about after, about the chips, which is not something that happens at all at Anthropic. There's none.
No, they don't make
tensor. Right?
They don't make TPUs. They don't make tensor processing units. They're out there trying to grub for chips from
everybody. So to me,
NVIDIA or anybody else that can give them chips. Look, in 2011. Stephen Levy and L.J. Grassner and one other guy, Gensler, wrote a book called In the Plex: How Google Thinks, Works, and Shapes Our Lives. And one of the theses of this book, and this is in 2011, and let me just see, like, I want to do something really quickly. Google Wiki, because I want to see when Google was founded.
Okay.
I think I know, but I just want to make sure. 1998.
Okay.
So at this point, Google had only been around, and I think they went public in 2006.
Okay.
Give me a second. 1998. I'm just trying to see when it went public. It doesn't matter. Anyway, the point is that 1998, so 13 years after it was founded, these guys wrote this book, and they were like, Google is so far ahead of every other company in the world, not just of every other search company, because by then most of the search companies had disappeared, in its ability to not just have data, but in its ability to gather data, understand that data, and analyze that data. And the more time that they exist, the longer they exist, the better they're going to get and the further ahead they're going to get from people in analyzing that data and understanding that data. So fast forward to 2026, which is 15 years later, who's going to be better at data analytics or gathering data or understanding data? Is it going to be Google or Anthropic?
No, for sure. And in 5 years or 10 years, I mean, Google seems a much, much safer bet, right? Because even if everything that they do fail, which means like they cannot get Gemini to be good, they cannot integrate Gemini into anything that they do, and I don't know, the ecosystem play just doesn't work for them for any reason. Okay, we just made that bet. They still have the data centers. They can still sell Anthropic models, and I mean, or they can just sell their compute power to Anthropic, and that's it. And
let's go even further, though, Martin, because I want to get back to this institutionalization as well, because we haven't spent a lot of time talking about that, but it's important. But let's say actually that AI is a bubble. We don't need all these data centers. And we don't need all
Okay.
these chips. No one's
Okay.
bidding up the value of Anthropic chip. I mean, not Anthropic, of Nvidia chips.
That's a big if, but okay.
No, but let's just say. But again, let's be extreme.
Okay. Yeah. Okay.
Google still has its search business, its ad business,
Yeah.
its
No, you're
Waze
right.
business, its Maps business,
Mhm.
its cloud business, its YouTube business, its Android business, its Chrome business. Like Google has a lot of businesses.
Yeah. Yes. 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 Yes.
They
Yes.
make
Yes.
smartphones and wearable technology, and YouTube has started broadcasting NFL games. Like, if nothing else happens, if there was no AI,
Mhm, mhm,
if the whole thing blew up, which it's not necessarily going to, it could get smaller,
mhm, mhm.
but it's not going to blow up. It's not going to disappear. Google's still going to be around.
Yeah, completely all right.
But we have had conversations, Martin, both online and offline, about like the first guys to invent search are gone.
Mhm,
There's no more Ask Jeeves.
mhm. Nope, doesn't exist anymore.
It doesn't exist anymore. I even think they shut down the website like a month ago or something weird
Oh,
like
really?
that. Something weird. It was just like it was still there for no reason. But the point
Okay.
is that Google is not going away.
Yeah, no.
But
They are
Anthropic
too
could.
strong. They are too
But
strong.
Anthropic could, yeah.
And plus, like we have spoken a lot on this show about that so already, but like AI V2 is coming, right? Like AI
It
V2
is
is
coming.
coming, and there is way too much competition against the API pricing model, right? Like so,
Yeah.
it's just like it's just getting so intense right now, and so that's one of the reasons why Anthropic should IPO really really soon, because there is more and more competition that's getting stronger and stronger, right? And so if you still want to sell the story of Anthropic is the number one and they are going to win everything, wow, you have to do it now because already I would say people like us who are super informed and who really follow everything and who are trying to gather as much information as we can. I don't believe the story of Anthropic is going to be the number one in the next 5 years, right?
No,
Like
I
to
don't
me,
think so
it's a
either.
really massive. Like if I had to take a bet,
It's just
yeah,
mathematically unlikely.
it's super
Statistically
mathematically.
unlikely.
Like if you give me the option, Martin, Anthropic gonna be the number one AI company in 10 years, or Anthropic going to zero? Okay, like one of
You
the two.
choose zero for sure.
One of the two, number one or zero, nothing
Right.
in between. And we asked me to put money on that. I bet on zero. It's
Right.
way
If it's
more likely.
binary, if it's one or the other, it has
Yeah,
to be one or the other. You'd bet
yeah.
on zero.
If it's one of the other and no other choice, it's way more likely when it goes to zero than it becomes the number one AI
Yeah.
company, right? Like because number one AI company, there's potentially OpenAI, there's potentially the Chinese, there's potentially SpaceX, there's potentially Apple and Microsoft, and Google is one of the largest player. So much competition, and Nvidia as well do their own model and try to go there. All the chips guys and Apple want to do on device AI. Like, I mean, the likelihood that Anthropic gonna stay number one in 10 years
This feels unlikely.
just feels very unlikely to me,
But
right?
also,
So,
and think about this, Martin. Like, what does an IPO do? It changes the discipline around the business.
mhm,
You really have to think about it this
yeah,
way.
sure. Mhm.
Well, it does, because like if I'm a private investor, remember I said the private investors are starting to get a little bit impatient, right?
Mhm.
But public investors, by definition, almost by necessity,
Mhm.
are really impatient because they care about quarterly earnings.
Wow,
Private
yeah.
investors can underwrite long-term stuff, yeah,
Mhm.
and they have. But public investors don't want to underwrite long-term stuff, not for the most part.
Wow,
They want to
it's
know
just
like
quarterly.
their quarterly reporting.
But so what's gonna happen to these companies who lose tons of money?
So why do you think that I have predicted that SpaceX price is going to go down? First of all,
Yeah.
first of all, and don't forget that it's been given an exclusion from a bunch of different rules that put it into an index.
Yes.
One of which is, 2 years of profitability. I can't remember what it is, but there's some amount of like consistent profitability, which they do not have, and they don't have a path to profitability, because it's not like the old Amazon business where if SpaceX just turns off marketing,
Yeah, it's not the case.
you know what I mean? It's not gonna, there's no built-in profit.
Yeah.
And this is the thing here.
And it's going to be the same with Anthropic and OpenAI.
Yeah, so
Like
the public
they are in
market's
the
gonna
same
be asked.
situation.
The public
Yeah.
market here is being asked now to do something really weird.
Yeah.
And that is, these are companies that have like large consumer business. We said that 900 million people are using it, like using OpenAI. That's not all enterprise stuff, right? They also want enterprises to use it. So they want to have enterprise scale distribution and ambition in their
Yeah.
business. Yeah, that makes sense, right?
Yes.
But they have, and I said this earlier, they have nation state style infrastructure capital needs. And again, if they did nothing else, if they did no marketing, no nothing, but just trained their models forever, they'd still lose money. Okay. And because they're not the first company to go public, a lot of the oxygen, again, is going to get taken out of the market, particularly SpaceX now has a 167 handle on it. 2 seconds ago, it was trading, we had a 169 handle on it. The low today is 166 something. So about $1 below where it is. But my point is that, like, because they're second, people are going to watch SpaceX and go, huh, that thing went into the index and it didn't pop as much as we expected it to. So why would I invest in the IPO?
So that's why Verbit and OpenAI did to IPO before all of this happened. They have no choice. They have no choice. They need to do it right now. Because the risk that exactly what you just say happened, right? Like SpaceX just go to 90, imagine, in 6 months, right? This is not impossible, but at the end of the year.
Can I say that even if it does, it's I understand the point you're making.
Yeah.
But you know where Anthropic, you know where OpenAI, SpaceX has to go to really make people nervous?
135.
134.99.
Okay. So they don't even need to go to 90. Like if
it goes to 90, it is a
yeah.
Again, something I can't say on a family-friendly program. It's a nightmare, which is not what I would say if we were offline.
Yeah.
Okay.
No, it's true. It's so that's why, like, if this happen, and this is possible that it happens, right? Like that SpaceX price goes down to 144, right? To really scare everybody. And Forbidden OpenAI cannot IPO after that, because then everybody's gonna be like, yeah, we're not gonna buy the story right now, right? And plus, once again, we've said that many times on the show, but the competition is getting organized. Like, did you see, Michael, like the launch of the GLM model, and everybody from ZAI, and everybody has been talking about that in the last few days, where it was like as good as Opus for like a tenth of the cost, right? All the video I've seen on YouTube were like, yeah, you can use ZAI, like instead of Opus, it's 10 times better, it's a tenth of the price and all of that. So this is the type of, it's the type of, like, what do you say, like, it's the type of little thing, that hint to what could happen later, right? Like, I really remember this DeepSeek moment that wiped so much market
at the
value.
beginning of the year, beginning of last year,
at the beginning maybe of last year, 2 years ago, maybe. Time flies, Michael. But like
last year,
so the Chinese could do the exact same thing, or the Chinese, or AMD, or Apple, like, or whoever is working on something that compete with Anthropic and OpenAI.
right?
And then what happens, right? So like Max with go ahead.
Can you look at the comments? Yeah, because what time did he put this there? Because did we already talk about this or no? Did he already hear our answer or no?
No, I don't think so.
So we should answer this. So Max, you're right. The SpaceX valuation is ridiculous, and it was always going to be ridiculous. So the key that we were talking about here before you joined, Max, was this: is that if you look at the last round of investment for both Anthropic and for OpenAI, you've asked about OpenAI, but no, for both of them, it was rounded. I mean, I'm going to round up, but both of them were around $1 trillion. And we talked about the impatience of private investors, which is why these guys are going to have to do an IPO sooner rather than later, particularly because SpaceX has already gone through theirs. We're just repeating this for people maybe that joined a little bit late. They're going to have to issue stock at 1.2, 1.3, up to $1.5 trillion for the people that invested in the most recent round to even be satisfied. Something like 20 to 30% above the previous valuation, maybe even higher. But remember that a lot of those guys and gals that invested in the pre-IPO thing may have a lockup. And if you look at just the performance of SpaceX stock over the last few days, you can see it's gone down from a high of 200 to 167 today, which is what, a 15% drop. And the more it drops, the scarier it's going to get for people that paid the IPO price and are now thinking, wait a second, I've already made my money. I don't have any kind of lockup. It doesn't look like it's fundamentally going to go higher, and it has no path to profitability. What am I doing?
I think that's the
So
best
can I
question.
explain why they can't
Yeah,
stay private? Yeah. So this
go
is
ahead.
another
Yeah,
good question, Max.
that's the best question.
They can't stay private because there's pressure on them from the people that have invested in them, particularly the most recent investors who expected a quick flip on their money. They took 120. Remember, Anthropic's probably a better example than OpenAI, but both of them fall into the same category. Anthropic was not looking to raise more money after it raised $30 billion in, what was it, February or March, right?
Something like that, yeah.
People were calling them and begging them because they saw two things. One, they saw that the previous round where Anthropic was invested was $385 billion. I may have the number slightly wrong. And then they looked at OpenAI and said their last round was at $965 billion. Okay, well, I'm not going to say it's exactly 3 times, but let's say it's 2.75 times higher. So the new investors are out there literally calling Anthropic and going, we'll give you money at anything below like that valuation. Because at some point you're all going to go public, and Anthropic's like, we don't need your money to run our business. They're like, yeah, but we want to give it to you so we can have the pre-IPO money. And Anthropic was like, fine, we'll take your money, and that pushes up their valuation again to almost $1 trillion. And then they watched the SpaceX thing, where SpaceX making no money. Their AI business is zero generative for their P&L, and it still went public at $1.75 trillion. They're thinking, okay, if we invested at $985 billion and we can IPO this company at $1.75 trillion because that's where SpaceX went public, we're not going to double our money, but we'll come close. And there's a ton of pressure on them because neither one of those companies looks like they're going to be profitable in the next year or two, right?
Yeah. Also, Michael, maybe you need to explain like how the fund works, because the fund, like, they want liquidity as well. They want to get their money back, so they can invest
So
into something
a
else and
typical
all of that,
investment
right?
fund is going to be it's going to have a term on it of somewhere between 7 to 10 years, but mostly 7 years. So we don't know which funds exactly have invested in this. We know which VCs have invested. But I don't know off the top of my head which of their funds have invested. So I don't know what part of the life cycle they are there. But again, the key here is that private money is very impatient, particularly as it gets closer to the IPO. And that private money that invested towards the end of the investment cycle is literally probably on the phone every day with Dario Amodei and Sam Altman going, when are you going to go public? Why aren't you going to go public? Because I gave you my money with the expectation that I was going to double my money. And now you're telling me that SpaceX, which traded as high as $200, is now trading at 167. And if it goes anywhere near 135, it's a nightmare.
Scared. Yeah, everybody's scared. Yeah.
So I would say it's worse than perverse. And remember, Max, I'm not just making this stuff off the top of my head. I worked in this business for probably 15 years in Tokyo, at Goldman Sachs. I was there for 6 years, but I was at other big firms like that. I was at Morgan Stanley for 10 years, and I was at other companies like this. I worked on equity trading desks. I know how this stuff works. It's worse than perverse. But that's why. Okay. And keep asking questions if you have any more questions, but I want to give a little bit more information here.
Go ahead.
So some of the things that investors are going to try to understand as these companies are considering going public, or when they do go public, is, what's the right way to say this? How predictable is that revenue going to be? How durable is that revenue going to be? Right? So what's the moat around that revenue? And to be fair, it's not clear like how strong it is.
Nope.
And it's not clear like whether the pricing mechanism that the frontier lab models have is actually going to be durable as well. Martin, you and I talk about this all the time, this idea of like, am I going to pay for a subscription, or is that going to be free and then the services around it is where everyone's going to make their money?
Yeah.
It's just not clear. But we know for sure, and again, Martin, tell me where I'm wrong here, is that whatever the business model is that they're employing today is not going to be the business model that they're employing later. We're back down with a 166 handle here. But here's the other thing, and that is, think about their embedded costs. Like, one of the things that both of these companies have done pre-IPO is they've created this FDE mechanism, right?
Yes.
And that's going to be very expensive.
It's going to be very, very expensive indeed.
Because they're going to have to deploy people, 2, 3, 4 people into every institution that wants to use their product. And then they're going to say, you know, we're not going to pay a subscription for it anymore. And we're definitely not going to pay for API costs. Even if we do pay a subscription, your compute costs are going to be higher, at least today, than the amount of money you're going to make from us in aggregate. It's
Yeah.
going to end up being a nightmare, I think, for both of these companies.
Oh, it's gonna be a nightmare. That's why like, they will need to reinvent themselves, and that's why they need to IPO before all of this happens, right? And so that's why like the more organized I see the competition like becoming, right, the more I'm thinking
Yeah.
like we are going to see an IPO sooner, really, really, really soon, right? Because every time a new model from China comes out and there's a benchmark that says it's as good as Opus, it's a threat to the IPO itself, right? And so they need to IPO super fast. And then after that, I think it's going to be a massive bloodbath, right? Because then we are going to enter into a moment where, as a client, we may start to have a lot of options to go outside of Anthropic and outside of OpenAI
Absolutely.
really soon, right? Like, and for example, the Chinese models, tomorrow they can launch subscription as well. They can host everything for us. We can have open source. Maybe we can install that on our own hardware. Also, materials. Something I was thinking about this afternoon.
Go
Like,
ahead.
if we get to the point where we talked about that a lot on the show, that we would love to have a $5,000 computer that can run a local model, you know, just for us,
Yeah. Yep.
unlimited. The day we get there, it means that the tech is getting so cheap. So it means the hyperscalers, the data centers, they will be able to offer us a $10 to $20 plan to actually run it in the cloud. Because if
They'll
it
have
gets
to.
cheap for us, it will get
Yeah.
even cheaper for them because of volume and efficiency, right?
So, but Martin, think about this. Think about
So
this as a business. Can I
yeah,
interrupt you for a second?
yeah.
Remember when we went to AI Engineer, and then a couple
Yeah.
of days ago, we had the CEO from Similar on the show, yeah?
Yes.
So imagine if instead of Similar, which runs what's on, you know, you can run on his PC, all the stuff you'd want to run that manages your PC.
Yeah.
What if there's a place where you can run like on one of those AMD computers that you can buy for $5,000, all the AI you want?
Exactly. Yeah.
But it's hosted, but it's not hosted, but like that machine doesn't sit on your desktop. You can do it remotely because frankly, you don't need that much throughput to do this. It's just
Yeah.
like you're sending some.
So that's
Can
why,
I
like,
also can I answer Max's question on this because it's a really
Go ahead.
simple answer. So why did Anthropic, for example, need so much cash? They didn't.
Yeah, they didn't.
They did not, Max, and that's part of the problem here. Here's what happened. They actually said after they raised their 30 billion round at a $385 billion valuation, they were like, we don't need any more money for some of the reasons that you're suggesting here, right? Because they don't have hardware. It's mostly salaries. They do have to pay for other infrastructure, right? They need data center costs. They do need to rent or at least own some chips and stuff like that. But why did they do it? They did it because the founders of the company also own stock in the company. And if they own enough stock so that they can then go, wait, so someone calls them and says, we'll give you $65 billion more and we'll do it at a valuation of 985 or $965 billion. Like, we don't want your money. They're like, dude, your company was worth $385 billion 6 weeks ago. I'm telling you, I'm going to give you money because I believe in the IPO at almost 3 times that value, which means if you personally, if you know your company doesn't need the money, but you personally own enough shares in that company, you and your sister or you and your family own enough shares in that company, plus your employees, everybody that you've poached from other companies, they're like, we can go from 385 to 965 in 6 weeks. What are we doing? Why wouldn't we take that money? It sets us up perfectly for an 0.75. It's like almost 6 times the money. Let's call it 5.65 times the money. You're going to do it, even though you shouldn't, not because you need the money, but because you want to get paid more money when the thing IPOs. And you may think like, what's the difference between having a and that's going to make people make a lot of really different decisions. Is it sick? Maybe. Maybe. But is that reality? Sure. Sure.
And then to me, the Fable 5 ban, it was just marketing as
It's a
part of
marketing
this
ploy.
of this IPO roadshow, right? Like, because before they say, okay, we're gonna IPO, actually they need to do a roadshow both to promote the company and to promote the capacity of the company to actually go higher. That's why people are going to buy the IPO share, right? Because they believe the company can get bigger. And part of the roadshow is actually asking people how much you want to pay for it, right? And so if you want to rate it at the highest value possible, you need to show how good you are. And so this is when you launch a model that's too dangerous to be released, and then you did it banned, right? It's perfect timing. It's absolutely insane. Like from a marketing standpoint, it's perfect, right?
Yeah.
It couldn't be better. So yeah, so that's what I think. This is the story with Fable 5. That's what happened, I think.
Right. And look, so once these companies go public, what else are public investors or stock market investors going to have to understand? Well, they're going to have to figure out is all the money that they're spending for growth on compute, on data centers, and on chips and all this other stuff, is it going to actually make money?
Mhm.
Does higher usage actually turn into better margins, or does it just create higher costs for them? And this is the big problem that we were talking about earlier for these frontier lab models, and that is, as they get more usage, then it's going to demand more training. More training is the most expensive thing that they do, and that's just going to create bigger problems for them. And this is why, like, I frankly never understood why companies wanted to go public, because being a public company, the reporting requirements are just egregious and they're constant. And also, the market expects constant growth, some kind of growth. It could be revenue growth, it could be cost reductions or whatever, but it has to be some kind of growth.
Every quarter as well, right? It's quarterly growth. Like we're not talking about like 2 years plan or 5 years plan. No. You get to make progress in the next 3 months, right? On everything in your business. So as you say, it's intense. It's super intense.
Yeah. So I wanted to talk about John Jumper's move in just a little bit more detail, right? Because Mark, we spoke about this a little bit. Yeah.
Yes.
So you just have to understand that this is kind of like a bridge, at least at some level, if you're looking at this in a positive light, between frontier AI and scientific discovery. Because what he's built at AlphaFold showed that AI can solve long-standing scientific problems. Fair enough. Okay. And, we talked earlier about the protein structure stuff that they did. So that's important. And while the mainstream press may tell you that his moves suggest that they may be deepening their work in AI, in science and medicine and stuff like that, he could have done this at Google. But the reason why he left, and the reason why Anthropic wanted him, is both for the same reason, I think, regardless of what the mainstream press tells you. And that is, he wanted to make more money because he's going to get pre-IPO stock. And again, we don't know what price they've offered it to him, but it probably wasn't at the $385 billion valuation. It was probably at the previous round. We've already mentioned that. And he gives Anthropic cachet, but he gives them prestige because he's a Nobel Prize winner.
That's part of the IPO roadshow, Martin, Michael.
For sure. They're like, not only do we have models that are so strong we can't release.
This is insane. Huh? But I mean, it makes ton of sense, right? I mean, it makes ton of sense. I mean, if you really want to, at this point, it's really manipulation. Really, at this point, if you really want to manipulate the perception, right, of how good your company is and how great you're gonna be and how important you are, you would do exactly that, right? Like, I don't see a better way to portray your company as something so important that our product get bad, no Nobel Prize joins us, right? Like, I mean, they are going really, really far. Like, they're going really, really far.
Okay. Can we've been on this topic for like an hour, and I think these two things segue nicely with each other, Martin. But we've already talked about John Jumper joining Anthropic. We need to talk about Noam Shazeer joining OpenAI.
Yes.
Okay.
So Sam, he also leave Google DeepMind, right?
And leaving Google Deep, he was the co-leader of Google DeepMind. It wasn't like he was some junior employee there. And again, OpenAI is more, I would say, more scattershot, meaning less well organized, it seems to me. And again, the chat can tell us whether they believe us or not, or they agree with us or not. But it appears to me that OpenAI is less well run than Anthropic. But again, why would they want Noam Shazeer there? He was one of the original authors of a paper published in 2017, Martin, called "Attention is All You Need," that introduced the transformer architecture and literally became the technical foundation for modern large language models.
Okay.
So this dude, He didn't invent it per se,
Mhm.
but he was. And how long was he at Google? Again, a rhetorical question. He worked at Google from 2000 and 2021.
Oh, wow, for 21 years? No.
And then he left to found a company
Okay.
called, let me get it. Character.ai,
Okay.
where Google actually paid some amount of money, almost $3 billion in 2024 for a licensing and talent arrangement, and he came back.
Okay.
So my guess is that Mr. Shazeer, just like Mr. Jumper, has probably made some pretty good money in 20-something years at Google.
Mhm, mhm,
But again, OpenAI calls and goes, hey, dude, you want to make some real money?
mhm, mhm.
Come on over here. Come to that side of the fence. We get some real money over here, not the money you're making over there. And we'll give you pre-IPO stock.
Mhm, mhm.
And in 6 months, you'll be worth, instead of being worth like 50 million bucks, it'll be worth 150.
Mhm.
Maybe you can buy an NBA team. Do you know what I mean? Like all this kind of stuff.
It's funny as well how OpenAI and Anthropic have been doing the exact same thing one after the other in the last 3-4 months, right?
Right.
Like it's
Norm Shazeer is their John Jumper, right? I mean, it's the same.
exactly, it's the exact same thing. Like one of the two does something, and then 2 days after, the other does the exact same thing, right?
Yeah, it's like my
Like
girlfriend is hotter than your girlfriend. Like that's
it's
all it is.
and then you have a new girlfriend. I did a new girlfriend as well,
I got a
right? Like
younger girlfriend. It's
constantly.
just like, what are we doing?
But they do the exact same thing, right? Like they raise money at the same valuation. They file, what is it, like secretly for the IPO. Both of
Yeah,
them do that, right? Like
exactly.
they hire people. Boom, both of them do that. They do the exact same thing. It's really well coordinated, I would say, right? Like they must be speaking to each other at some point and in the background, like, hey, what's the plan for the next 3 months? What do we do, right? Like I mean, it's so well coordinated, and I guess like a lot of these films once again take so much time, right, to establish the relationship, to convince this guy to come. It's not like a 2 days close, basically, right? So it's maybe like a year or more. So I really wonder like how they get so coordinated to end up doing the exact same thing at the same time.
It's got to be unclear though to both of these because remember Dario Amodei came from OpenAI.
Yes, yes.
It's got to be unclear to some of the employees of both of those companies, like when they wake up in the morning, where they're driving to work.
Mm.
Like, am I still at OpenAI or am I? No, I'm at Anthropic now, right? And then a bunch of the Anthropic gals are like, I work at OpenAI today. It's like, don't I? It's got to be unclear to them at some level, no?
Do you think at some point they're gonna merge the two?
Merge.
Will they have to? Like they are so close to each other, right? Like they started together, I would say, right? Then Dario goes and start Anthropic. They do the exact same thing. They raise the same amount of money at the same price. They will probably IPO once again, really close to each
So
other.
let me tell you something
Yeah,
that's never going to happen, Martin.
tell me. Dario go back to work with Sam. They fire
Manchester United is never going to merge with Chelsea
or Manchester United
or
or Manchester
or Man
City.
City.
Yeah, Man
It's just
City.
not going to happen,
It's
right?
true. Yeah, yeah, it's
I'll
true.
put it this way: Manchester United is not going to merge with Liverpool. Those people that say like you'll never walk alone, some of them
Yeah,
would rather walk alone
yeah, yeah.
than merge. And I think it's like, are the Yankees going to merge with the Red Sox? No, not going to happen. And I don't think these two are going to.
So I would say at some point, like I, th- so I mean, we've talked a lot about a potential acquisition of Anthropic, right, Michael? Like this was something that we talked about, I think, last month or
Yep.
something like that. I think maybe like the fact that they are rushing to the IPO is maybe to not be acquired. Like how do you want to acquire or merge a company that's already worth $1.5 trillion and that's a public company? Is it
So
possible?
do you know how you do that?
Yeah.
You wait.
You wait until yeah, okay, yeah, you wait, yeah, okay, good points, good
You
point. So you
wait
wait until they get much smaller, right?
till the price goes way down.
Way
And
down, and
everybody
then you
now gets
acquire them.
desperate and they're like, okay, you'll buy us for $25 billion.
Yeah,
Fine.
okay, because that's the only possibility. As soon as they are publish, it's much harder, right? Like it
Well,
was possible.
but on the flip side is, Martin, what did SpaceX? How much cash out did SpaceX pay for Cursor? Cashed out?
Yeah, 60.
No, 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 no,
Zero,
no, no.
sorry, zero,
Zero.
zero.
Let's
Yeah,
be clear about it. Zero.
yeah,
They
sorry,
paid
sorry,
zero.
cash. Yeah.
So the difference is that SpaceX used its IPO new shares. They issued more shares to buy Cursor. So, and again, the Cursor team, do they win or they lose? We don't really know because we don't know what their lockup is, but we definitely know what their price is, and their price is definitely going to be on average above the IPO price.
Yes.
Anyway, so just one more quick question from Max. After you have like $5 to $10 million, doesn't the allure of more millions fade out? Dude, which part of no don't you understand? I don't mean to be mean.
What about the villa in Cannes that cost $14 million?
Let me just put you this way. Yeah, let me just put you this way. If you get $10 million, you're going to want to buy a house for your mom. And then you're going to have $8 million. And then you're like, oh God, I wish I had 10. And then you're going to get a job offer from Google for $25 million. Like, okay, now I'm back above 25. And then more people are going to ask for more things. And then like your wife's going to ask you for stuff. Your kid's going to ask you for things. And the next thing you know, you're back down to 10 million bucks. It's just never enough. It's just never enough. Okay, I know this for a fact for myself. I left a really good high-paying job for way more money for all the wrong reasons. We talked about this before you came on, before you listened today. And I know plenty of other people that have done that. And also the money is a measuring stick against other people too. Here's the thing is if you move into the $10 million neighborhood, you're probably buying the cheapest house there. Those other guys are probably making 50, 60 million. And I'm just telling you, your family's like, Dad, I don't understand. That guy bought his son a Porsche for his birthday. I just like, what's the Maserati? I don't get it, kind of thing. It's never enough.
Yep.
Anyway.
Yep. But like, let's go back to the acquisition of Cursor. It's actually very interesting. They paid in share, so zero in cash, but all in share for 60 billion. Okay. If we go back to Anthropic price in February, it was like 300 billion. Like for 6 times you have Anthropic.
385.
385. Right, sorry, 7 times you for 385 you can buy Anthropic.
Yep.
Let's remember that SpaceX IPO'd at 1.75, and at some point they were above 2 trillion, right? Maybe 2.1, 2.2. What's the highest? Do we have the
I don't know off the top of my head.
Let's say 2, right? So the extra 300 billion that they made after the IPO, they could have used that to buy Anthropic back in February. That was the price of Anthropic, right?
But they weren't public, so they didn't have the stock to offer, right?
So they didn't have the stock to offer because they went public in June, and Anthropic valuation was in February, right? So the timeline here did not work. But that's probably why Anthropic want to IPO super fast, maybe to avoid to be acquired with some sort of weird mechanism like that, where SpaceX could just acquire whoever they want at this moment. But now they can't because Anthropic and OpenAI are worth $1 trillion, and that's too much, right? So, but if it was still 300, we know like how aggressive Elon Musk is. Like maybe he could have, maybe he could have. So that's why I think like maybe that's also a way to protect themselves, to just like, against somebody who's gonna be aggressively, what's the word, Michael, like when you do like when you aggressively buy a company, like what the GameStop guy wanted to do with eBay. Like there is a term for that. Hostile takeover. Like an hostile takeover.
Yeah.
So if they IPO too high, or once they are a public company, yes, thank you, Miles, then it gets much harder to do that. And we have no idea like what's the relationship with their investors, right? And as Michael said, maybe they are pushing really hard to IPO really fast.
And I'll put you this way, Martin. If you think there was pressure from those new investors in May, how do you think they feel today when SpaceX is now traded its lowest price of the day, its lowest price of the last 3 days? Actually 16, 17, 18, 22, yeah? It's trading it now. It has a 165 handle on it. And the thing is, selling is going to beget selling. But also, don't forget, you don't think anybody's borrowing stock and shorting it?
For sure. What's the name of a super famous like shorter? Bill Ackman, no? He did that?
Don't know.
The guy would just go on TV and just say like he's shorting all this company. Yeah, that's Bill Ackman. He's just like a big short seller. Let's see if we
165.85 last
if
price.
we hear from him like very soon that he's short in SpaceX and maybe more in the AI space. But also Michael, think about Microsoft. Like they put so much money into OpenAI, and they don't look like they still believed so much in them, huh? Like
No,
it
because
looks like
they started working with DeepSeek. But here's the other thing too, Martin.
yeah,
Who has more downside? Let's say
yeah,
Microsoft put in $25 billion into OpenAI.
yeah. Don't you
So if
think they want to
$25 billion
integrate?
goes away from Microsoft, what changes at Microsoft?
Yeah, nothing. Like they
Not
don't.
much. It was the
Yeah,
right
not much.
answer. Nothing is probably. Oh, did it trade 164? No, 165.85 was the low for today. Yeah.
Yeah. But so that's why, like we don't know what's the relationship with the investors. Like maybe the guys are
But there's a ton of pressure now. There's a ton of pressure
very,
now. They're like, what are we doing, guys? How come we're not public yet? How come? And why is this SpaceX thing trading down? Like, why? What's going on?
yeah, what's going on? Exactly. Yeah, no, it's true.
Because
It
they
shouldn't
were
be a
cheering. They were cheering on IPO day. They were cheering on the next day and the day after as well when it went up to like $200. It. I did a little search here. Give me 1 second, Martin. Come on. So SpaceX closed at 160.95 on June 12th, 192.50 on June 15th, 201.80
oh wow.
on the 16th.
So 201, that's what, like 60% over the normal price?
Let's do some math, right?
Yeah. Just to have like the total valuation of the company.
201. I'm just going to round, yeah.
Yeah.
135 minus 135 divided by 50% higher.
50%. Okay, so which means like the 1.7 trillion, it gives them like 2.4?
1 second. 2.6.
2.6, okay. So imagine 2.6 they could have bought Anthropic back in March, like when they raised funds at 400 billion.
But I'm just saying, at $2.6 trillion, what do you think the Anthropic investors were thinking?
Yeah. No, for
They
sure.
were like on the phone with like 1-800 my biggest yacht. Hello, it's Michael. I want a 700-foot yacht. Yeah, just like
Yeah.
Steve Ballmer's. No.
Exactly.
Abramovich. I want Abramovich's yacht. Two of them. Right? And now what are they doing? Sell.
Yeah, no, it's true. It's going to be intense. But like, I think it's going to be super intense right now because it looks like everybody pretty much agree that in 6 to 12 months, the pricing are going to be much, much, much lower, right? And so they want to cash out right now before it gets lower. But it looks like everybody's scared that in 12 months it's going to be much, much lower than what we are talking right now. All right.
But I want to be clear, Martin. One of the reasons why I want to talk about Gemini hiring Noam Shazeer, I mean, not Gemini,
Yeah.
but OpenAI hiring Noam Shazeer and John Jumper moving to Anthropic was because it's not just like the news will tell you, well, he's a scientist and this is blah, 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 and that Shazeer has all this. But the reason why those guys would leave their business is because they thought they could make a shit ton of money joining these new companies. And you're right. It's the same way, I believe. 165.55, that's the low of the day as well. Is that I believe that they also believed that as they crest into their IPOs, that having these two sort of very high profile guys in the AI space on the team as part of the roadshow and as part of the marketing mechanism would make people feel more comfortable. But the thing is, if this IPO goes poorly, and if SpaceX keeps trading poorly, those guys could just go back to you know that Google would be like, hey John, you want to come back over? We'll still pay you $5 million a year, whatever it is. I don't know what he's making, right? And he'd be like, sure. Now at least I understand my commute. And when I answer the phone, I can say, John Jumper from Google, how can I help you? Do you know what I mean?
No, yeah, it's true. It's
And
true.
then
It's
when
a
John Jumper
very
and Norm Shazeer see each other in the cafeteria, they can be like, "Phew, that was weird, right? I was over at Anthropic. That's craziness."
I mean, it's very likely to happen, Michael. Like we are laughing about it, but I see a
I'm not
world where
joking,
this
man.
happens in the next 12 months, in less than 12 months. I mean, I see so much pressure right now on the business model of Anthropic and OpenAI, plus like everything that we discussed today and the last few days from a stock market perspective.
Yep.
I mean, I'm not buying the Anthropic stock tomorrow, for sure not. Like,
No,
definitely
you're
not,
not.
right?
No.
Like, I mean, everything's wrong about this business, I would say, right? Like, and the craziest parts for me about all of that
Mm,
is they have a good product, right? Like their product is great. Like nothing about the communication, about all of this thing is about the product itself, right? Like about the
mm.
roadmap and about the innovation and about everything that they are doing to make the client happy and to get new market shares. Nothing is about that, right? It's all about crazy finance stuff at the moment, right?
Mm.
To that really signals to me that they want to cash out. They just want to, they really want to cash out of on the last couple of years that they had that were AI V1. They dominated this phase. This was amazing. This was great. But everything is changing right now. That's the moment to, okay, close this chapter, get your money out, and then start a new chapter, right?
It's almost like these
And
companies aren't trying to run a business, but they're just trying
they
to
are
run
not
an
trying.
invest. They're trying to build an investment scheme,
It really looks like that to me, right? We don't talk
doesn't
at
it?
all about the product. They release a product that they bad. Like things makes no sense. Like really, it makes no sense to me from a product standpoint, right?
So
And
let me help Max out because Max
mhm,
wants to know how he can have a
yeah,
yacht.
how you don't have a yacht?
So Max, you haven't heard this, but there was a very funny joke by a very famous comedian in the 1970s, maybe the early 80s, and his joke went something like this: "How to make $1 million in the stock market." Martin's heard this 1,000 times. Step one:
Yes.
get $1 million. So, with the risk of trying not to be funny here, what would you build in this space? And again, Martin, tell me where I'm wrong here, but I'll tell you what you should build in this space if you're really good at building stuff. Build something that uses artificial intelligence, but that's not wed to any specific model, or frankly any specific type of model. Build an orchestration layer around it that everybody can use and that's multimodal, so that everybody can use it with any model possible and any type of A possible. Any type of AI possible, excuse me, and then build services around it. And I would work as closely as you possibly could with the open source models because they're the ones where the cost is going to be lowest and your upside is going to be the highest. And if you wanted to study somebody that did this, go back and look at Red Hat,
Mhm.
who took a free open source product like Linux and turned it into and that nobody had to pay for. Linux is free. It's still
Mhm.
free. But Red Hat made a ton of money on it over the last 30 years, I would think. I don't know exactly when Red Hat was founded. I can look it up on the internet. But they built a very robust business by providing services to people that wanted to understand. And I'm simplifying a little bit, but that open source, if you can partner with the open source companies to get the same functionality that you can get from these frontier models that are very expensive, that's how you build a business that's going to get you a yacht.
Mhm. And also, like to add on that, you have also the WordPress ecosystem that you can look at, like with the company Automatic, that is also
Yep.
serving services around the free software WordPress, right? So that's really very similar type of business.
Mhm.
And then I would say you get to be cognizant of the fact that everything is really fast into AI at the moment. So everything you do tomorrow may be completely different in a couple of months, right? So you
Yeah.
get to stay very agile. And there is plenty of problems right now into AI that can be solved, like inside of these services that you can do, like for example, all the governance and all the data layer, and like how can you help companies do that? even just like implementing AI into a company, it's really, really hard. Like for people into the tech bubble like us, it's simple, but for everybody else, think restaurant, think hairdresser, think like, all of these guys, they are like so far away from being able to use AI at the fullest.
Exactly.
So there is an opportunity here. But at the same time, as I said, everything changing every couple of months, right? So we get to be agile, we get to see like how it goes. And that's why having a collection of services, working on plenty of stuff,
Yeah.
then that is definitely going to solidify the business, I would say. Then on the other hand, building is going to be easier. So on the services, on the building side, gonna get like easier and easier, plenty of competition. But what's gonna be much harder is gonna be distribution.
Yeah, for sure.
And distribution is gonna get harder and harder and harder just because there will be more and more and more competition. So I would say start right now learning everything about marketing, about sales, about customer acquisition, about like everything you can to build a brand, maybe to build a personal profile, because this is what's gonna help with everything else down the line when competition is just going to be much harder, right? So the marketing side is going to be is even more important right now. And the third thing that I could maybe share with you is that I really see today AI as a way to amplify massively what we are doing rather than replacing something or doing something new. It's more like, okay, how can we do this thing? Not one time a day, but 100 times a day. And AI is really, really good at
Yeah.
that.
Yeah.
Like it's like, so as soon as you find something that works, or you can find a company that has something that works, or like a workflow that's good, you plug in AI into that just 10x everything, and that's really immediate, I would say. Gain, like really, really quick gain, and then just build a cron that just run like run consistently, 3 4 agents that just run, and then boom, it just work really, really, really nicely when there's already a workflow that works, and then can do that 100 times instead of just one time. So but once again, something that works as of now, but may completely change in a couple of months, couple of weeks, couple of days, maybe, right? So
Yeah.
just to stay super agile.
The other thing that I would do actually is I would
Mhm.
try to ignore as much as possible the narratives that you see in mainstream media.
Mhm.
I know that seems like a hard thing to do because it can feel a little bit overwhelming sometimes, but the reality is that they're not reporting things to you for your benefit.
Mhm.
They're reporting things to you for their um for their own benefit.
Mhm.
And once you figure that out, you should be skeptical of everything you read in mainstream media or everything you see on TV in mainstream media.
Yeah.
Because you have to understand why they're reporting stuff to you. So like when you see stuff like, oh, they're hiring, these guys because he has scientific knowledge and they want to move more into science, it's probably not that. It's probably a head fake.
Mhm.
And it doesn't tell you like what you should build. They're
Mhm.
just trying to create a narrative that actually helps that company. You'd have to be cognizant of that as well. That's something you'll never get here. Actually, we're just
Mhm.
going to give you sort of really hard analysis. And that's why I think not just people listen to us, but more and more people are starting to listen to us because they feel like they can actually learn something here about real things.
Yeah, I mean, if you can do a little bit of promo about us, like we use AI absolutely every day. All of our business is powered by AI at every stages, right? Like it's just insane how much we can do thanks to AI as of now. We talk about AI, we analyze the news every day, and plus we talk to plenty of CEOs who either build with AI or implement AI into their
Mm.
company, right? So we feel like we have the platform to actually both try stuff, but also ask a lot of questions to the people who are also doing stuff, right? And today, actually, we what on the Asian show, we got like 5 or 6 guests, right? Like all
6.
CEOs, all people who are implementing AI into their company. So that gives us a lot of information that
And
then
all
we can
building in different
implement.
domains too. So we get to add
Yeah,
a
yeah,
bunch, get to ask a bunch of different questions. We don't just want to know what they're doing, we want to know
mhm,
why.
yeah. And we do that all live. Everything we do is recorded, right? And we just publish absolutely everything that we learn from ourselves, right? So that's also a really good way, I think, to stay both informed but also
Mm,
connected to what's going on, right?
exactly.
Because, like, for example, like my feeling about the competition is really starting to get organized against Anthropic and OpenAI really comes from the fact that plenty of our guests are actually using open source models, right? And they say to us, hey, look, we implemented DeepSeek, we implemented Kimi, we implemented that. And this is interesting information, right? To see that people are already using something else than Anthropic or OpenAI, right? So thanks to all of that, you can learn more about what's going into the market, see what are the real problems, and this is really how you build a real business, like fixing real problems for real people.
Exactly.
Yep. Do you want to talk a little bit, Michael, about Google launching the chips?
We can if you want to.
Yeah, let's the batches. We already missed it on Friday. Huh?
Yeah,
Tomorrow's
so
gonna be two.
let's just transition from all this sort of Anthropic and OpenAI stuff and talk about Google, a company that's actually running a sustainable business, that's been running that business since it was founded in 1998. And it's also involved in the AI business. And, you know, Google has developed their own chips, these tensor processing units or TPUs. And they use that to run not the only stuff that they use, but it's part of the infrastructure that they use to run their own artificial intelligence stuff. And what they've realized is, hey, you know what? Other people can use our TPUs. Like NVIDIA is not the only story out there. And Google is now trying to put all this stuff together because we talked about this. They have the cloud capacity, they have money, they have data centers and data center partnerships. And they also have a bunch of customers that would want to scale an alternative to NVIDIA, and they already have these TPUs. So the other thing is Meta has also reported a multi-year, multi-billion-dollar agreement to rent Google's TPUs.
Oh, wow.
Yeah. Which we also talked about, but again, we didn't make a big deal about it because they did it in the context of building some of their other models. And we know that Meta is one of the largest now CapEx investors in their own AI compute. And we also know that up until now, most of the compute has been done on NVIDIA's GPUs. And any kind of move, even an incremental or marginal move from NVIDIA stuff into anybody else's stuff. But, you know, Google is a legitimate player in the AI space. Yeah.
Yes.
And Martin, we may have been having this conversation before we started recording or not, but, you know, did we talk about the movie not the movie, the book in the Plex as we were recording or no?
Yes,
was that before we did, right?
Doing the recording now.
So again, Google has all this data, all this information, all this experience, and they've been working on AI for longer than most people know because they didn't release their Gemini stuff until OpenAI got released. And they're like, fine, okay, we'll put this stuff out. But one of the things that they'd been doing anyway forever was developing their own chips to run their own AI. Okay, and that's going to be actually pretty important. So the broader market as a whole, we know, because of the constraints in the chip market, but also in the compute market at scale, is saying we need an alternative to NVIDIA because while the NVIDIA chips are great, you know, first of all, they're great at training, but they're not great at inference. Right, so they're redeveloping. Their newer chips are better at inference than their older chips are. But Google's TPUs have to be an alternative to that, and that's actually kind of important. And that was one of the reasons just why I wanted to bring this up, because all the conversations that we have around the chips, it's either the Cerebrus stuff, right? The new way that chips are getting made, or the old way, and that's always a conversation about NVIDIA and Jensen Huang and all this other stuff. Like, you don't even know who the guy who's running the chip business is at Google, do you?
Nope, no idea.
I don't know either. Do you know why? Doesn't matter.
Doesn't matter, yeah.
It's the same way Jensen Huang doesn't matter. Like, it's neat that he's wearing that kind of pleather jacket that he wears all the time. I don't know. Maybe his daughter bought that for him. I can't be 100% sure. But
his style.
That's his style. He's trying to do like a Steve Jobs, not Steve Jobs kind of thing. Sorry, not sorry kind of thing. But again, you think about it. They have custom silicon.
Yeah.
They have Google Cloud. They have the ability to rent these TPUs out to people. And they have big customers like Anthropic has also contracted with them to use some of their chips, and Meta.
Yeah.
So they're pushing, and they're always, you know, Google has money. They have free cash flow, right? So they're going to be pushing newer TPU chips out there as fast as they possibly can. And they want to use them to train the large models, run inference, and support agentic systems as well. So they're slowly but surely building their own chip business.
And it makes ton of sense, right? Like in the ecosystem of AI, what do you have? You have the data centers, you have the chip, you have the power, you have the models, and you have the distribution, maybe if the model is different than the distribution. But that's
Yeah.
pretty much it, right? And
Yep.
so Google already has the data center. They will get probably their own power at some point, but they have a data center, they had the model, they have all the ecosystem for the distribution. Now the last thing that they need was the chips, right? And so now they are playing everywhere. And because it's so uncertain, who is going to make, I mean, which business in AI is going to make the most money in 10 years?
Yeah.
Who are going to be this player? You get to try everything, right? Like I'm actually very not surprised at all that Google is doing that, right? They have
No,
to try
not at all.
everything, even if it fails, right? Even if it fails, it doesn't matter, because if it succeeds, there's another line of business for Google on top of everything else that they do, right?
Mm.
And there's so much potential into that. Like it definitely worth the, I don't know what investment that they are making, but it's, yeah. So look, they say Alphabet on Google has provided 3.2 billion financial guarantee for the project. 3.2 billion.
Mm.
It's like nothing, right? Like compared to the potential of Nvidia, which has a market cap of 4 trillion, right? So like if you put 3 billion to get at some point a part of your business that can be worth 1 trillion, this is very, very good trade. I would do that all day, right? So that's the type of thing that we're talking about here.
So
And yeah.
I was just gonna say, Martin, remember this as well.
Mhm.
You know, we talked a couple of minutes ago about if Microsoft invested a lot of money in OpenAI, and let's say they put $50 billion into it. If they didn't have that $50 billion, what would change? Nothing,
Mhm.
according to Martin Runford. I agree, nothing.
Mhm. Mhm.
We went over. Remember a couple of weeks ago, we went over Meta's revenue growth, right, and then their
Yeah.
capex growth. So they're going to spend 135 to 140 billion dollars this year, and maybe more next year, and their revenue is 200 billion dollars.
Mhm.
So if they keep overspending and their revenue doesn't grow in line with their spending, they could be in trouble.
Mhm.
What is Alphabet's revenue? Again, a rhetorical question. I don't want you to really guess,
I
but
checked it just before, so that's
did I?
okay. Go ahead.
So
I
at
was
least we're
about to
thinking the
say
same way.
400 billion. I was about to do that, but
Projected to 422 billion, maybe, if I had to guess.
and we have what, like 160 net income, right? Something like that, I
Something
think.
like that, approximately, if I had to guess.
Right, yeah, 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 okay. So I was right with the math and like the number of things that they said and plus the profit margin. Okay, perfect. Yeah, okay, I get it.
But the point is that if they invested $135 billion in capex,
Mm,
kind of doesn't matter.
no.
But Meta's revenue doesn't justify the spending of $135 billion, and Gemini is a much better model today than
Mm.
Spark.
Also, let's be honest, like Gemini in Google search is amazing. Like really, they found the use case. This is good. This is really,
Yeah,
really,
no,
really
it
good,
works.
right?
It's
Like
that's the point, though. Yeah,
they found an amazing use case. Finally, I would say it's been
but
many
but
years
again,
that they've been
the
looking
point I
for.
think the point I think that both of us are trying to make is they can invest as much money as they want in their chip
Yeah,
business, and if it doesn't work, it doesn't matter.
it doesn't matter at all, right? It doesn't matter. But the potential upside is enormous, and even if it's okay worse, right? Because I feel like this is just something, Michael, to consider is that we see a lot more chip maker today than we did 10 years ago or 5 years ago.
Way
Like,
more, and more research and development being done in the chip space as
and
well.
tons of them, right? Like, I mean, I've been speaking to a lot of companies who make cheap to come as a guest on AGTP, right?
Yep.
Like, so
Yep.
we see, of course, the Nvidia, the Cerebras, like all of these guys that made the news, right? But outside of them, outside of this group of large companies, there is a lot of other companies who are actually making chips for AI. They really a lot, right? And right now, that's the hot topic as well, and people really want to make chips for AI because we're gonna need more of them, and that's
Yeah.
a huge opportunity, both for the entrepreneurs and for the researcher, for the investors. Like this is a really, really hot, a hot topic right now. And so there's more and more competition, more and more people who are trying to build chips. So we may, get to a point where it's no more like a winner's take all, right? Like if you are good enough and if that's okay, you may get some market shares. And when you think about Google Cloud business, they are not the best. and that's okay. They get some market share, right?
Mm-hmm.
Like it is a really profitable business that made them a lot of money. And maybe the cheap business, even if it's not amazing, it may become something like that, where they made 10, 30, 50 billion dollars per year, and that's okay. That's enough until, I don't know, either they buy another company and they make it bigger, or they sell it, or they just keep it like this, right? And then it just become another player on the market.
Exactly.
And if even worst come to worst, they could even use their own chips or their own data centers, right?
Yeah,
And
yeah.
that would
They don't need to
be,
invest all this other money in somebody else's infrastructure so they can do it all themselves.
and then they do it all of themselves. And then going back to what I was saying earlier, if we can get to a point where a $5,000 computer is enough to run a model as good as Opus, it means that on the data center side, they will be able to provide really, really efficient cloud hosting plan. And maybe we will not even need to buy a $5,000 computer.
Yeah.
Just like think about it, like nobody hosts their website locally. Just
No,
doesn't exist. It's the behavior that we do.
no. Makes no
Why?
sense.
Because we have a $5 plan or a $10 plan with like plenty of companies in the clouds. Why? Because the tech to be able to host the website got so cheap that we're not gonna buy a dedicated computer
Mhm.
to do that. Like now, I start to believe more and more that we may get into the same type of situation where the cost of hardware gets so low that actually the one who are going to benefit the most are actually the cloud provider, because they would be able to give us a $20 plan to host Chimmy 2.5 or Chimmy 3.5 at this point, and to just run it in the cloud for super, super cheap,
Right.
basically, because the hardware will get super cheap. And so if we get to that point, we will get to a very well-known business model, which is the cloud computing that works really, really well. And Google, AWS, Microsoft Azure, and Meta. I think if that happens, Meta is going to launch a cloud business. They have to.
Yeah.
They have to. No other possibility for them. They are going to be the massive winner. Like this is just going to be massive. And so they will need chips. For this, they will need hardware to power the data centers. And so that's why this type of announcement makes a ton of sense. I would do the same thing if I were them.
I agree. And I just want to check out one more thing and then we can go.
Ah, Max, you are from Montréal. Montréal. Tu parles français alors?
Okay, let's just stop with the French stuff.
We can do the podcast in French then.
Sure.
Michael, once again, you're the only one who
Then
can't
I'm
speak
left
French
out in the
here.
cold.
Oh la la, that's really funny. That's really funny. But yeah, no, I really think that we made it to a point where cloud hosting get actually super, super, super cheap. Which is interesting in a way because the Chinese didn't get so much market share outside of China. Like Alibaba Cloud, Huawei Clouds. Like we see them a little bit, Michael, right? Like here
Yeah,
in
yeah.
Southeast Asia, but they are not the dominant players, even in
No.
Southeast Asia.
I want to make one more point about the chip
Okay,
business, though, Martin. Is that
go
in a
ahead.
way, it almost it matters, but it doesn't matter how many chip designers there are out there,
Okay,
because most of the chips in the world get made by one company,
okay.
get manufactured by one company, TSMC.
Mm-hmm. Mm-hmm. Oh wow,
Most,
okay.
not all of them. Samsung does do some chip manufacturing, but they mostly manufacture memory chips, so DRAM and NAND,
Okay,
not CPUs or GPUs.
okay.
So and building a fab is just like hard work. It's hard yards. It's very expensive, and it takes a couple years to build.
Mm-hmm.
And that's true in English and in French, by the way. Just so
Yes,
you know.
we will do the next podcast in French, Michael, then.
Sure. Don't even, Martin, I don't think you want to start this conversation.
But yeah, no, that's why I think the chip business is going to get very hot as well. Like, I mean,
For
I think it's already very hot actually right now. It's just like not, it's less mainstream than the frontier model, right? But it's already really competitive, and there's already a lot of money. Like, this is also another one that I'm not super. I mean, it's not that I'm bullish. It's more like there is competition. We don't know who's gonna be the top three players winning in the next
in the
five
chip
years.
space.
Yeah, in the chip
No, I
space.
think it's a weird
Yeah,
time in the chip market, right? Because in
yeah,
the old
it's a
days,
bit
you would
weird.
have said like Intel would have been your choice
Mm,
of flavor for the biggest chip maker in the world, and like no one talks about Intel anymore because they don't make any of the CPUs or GPUs that are used for artificial intelligence.
Yes. It
Right.
looks like Nvidia. I mean, Nvidia obviously has a head start, right? But the Chinese are going to make their own chip. Everything is going to change, I think, as soon as we have Chinese chip on the market. I think it's just going to change
And also
everything.
think about this one, like AMD came out with their own sort of AI processing machine, but Intel didn't, and AMD licenses Intel's designs for chips. You know what I mean? So AMD is actually doing more innovation. I don't know. The chip space is in flux for sure.
Yeah, no, for sure. For sure. Max question: did you guys hear about this rumor of ASML machine possibly getting lost into China? I did not.
No.
Tell us more about the story. I did not hear about that. But that's interesting wording, getting lost into China.
So here's the point. I think the point he's trying to make is what we were talking about before, Martin, is that ASML denies that they sold a chip making tool to China.
Okay.
Getting lost there.
Okay.
But it's going to happen. I mean, we've talked about this multiple times, whether it's NVIDIA's chips per se or ASML's machinery or TSM, like all this kind of stuff. At some level, there's a black market for it. There's enough money at some level for anybody to buy whatever they want. Yeah.
Yeah. And so that's what I think is just a matter of time before China is able to make frontier chips as well, right? Like it's because they are going to be able to get the tool, they are going to be able to get the talent, they are going to be able to build it, right? Like whatever way they're gonna use doesn't really matter. Maybe they already have something great that we just don't know, right? But
yeah, exactly. Why would they tell us?
Yeah, we would have no idea. They could sell it first into China. They could sell it to DeepSeek and Kimi and Zed and I mean, think about like all the AI companies that are there, right? Like there's so many that it could get absolutely to give them like a bit advantage for like a couple of months, maybe a couple of years. They could power Alibaba Cloud and Huawei Cloud. Like I don't know. It looks like I don't know. I'm really scared for the AI US market as soon as China gets fully up to speed, right? Like it's going to be like they will need to adapt. Like they will need to adapt and they will need to change a lot of stuff. And I don't know how they're gonna survive. I mean, not survive in the sense of go to zero or not, more in the sense of Anthropic makes a lot of money for the API token sales right now. If that goes away, they will need to replace that revenue
with something,
right? With something, and that will need a lot of $100 plan to make $50 billion per year, right? Like,
yeah,
so,
exactly.
How
lot
do
of
you get
a lot of
there?
that $20 plan.
Exactly, a lot of them, right? And how do you get there? How do you get there? And you get to start as soon as possible before it's too late, basically, right? So that's why I think a lot of things are going to change in the next months. Siege 12, 48, we have no idea, right? So our original age. But I think we need to be prepared, and that's why, like as an entrepreneur, Max, when you start your business, you get to be ready for all of these things. At least think about it, so when it arrives, you don't get surprised. And I think everybody should also think about it in this way. Things may change, and so try to understand it so you don't get surprised.
Martin Max is going to be the first guy invited onto our yacht. Yeah.
Once we have it, yes. Once we have it. So what's our plan, Michael, to have a yacht?
Well, I mean, you know what the plan is, but we can't tell anybody. But you know what the plan is.
Well. Yeah, no, we are so scared. We are building in stealth.
Yeah, no, we're not building in stealth. But the idea is that, like, if we release our plan, it's so dangerous. The governments might shut us down.
Yeah, we should have done for sure.
Okay, let's end there. I think before we get a little bit crazy. How does that sound to you, Martin?
Yeah, it's good. Thank you very much, Max, by the way, as well, once again, for all of your questions. Super interesting. Yeah, super interesting. And good to know that you speak French.
Exactly. Okay, everybody, thank you. That is it today for AGTP Daily. As always, thank you to the viewers and the listeners that participated with us today. Thank you, Max, for all the questions. Tell all your friends that they should join us for the next episode. Thank you to all the people that are going to watch this after the live goes up on all the platforms. And as always, give us a thumbs up. No one's ever hurt their thumb by doing it. Subscribe to the YouTube channel. Follow us on all of our socials on X, on Instagram, and on LinkedIn. And ask us questions even after the episodes get published. Go back to the old episodes. Ask us questions on those as well. We love interacting with our viewers and our listeners. We will be back again tomorrow at 11 a.m. Eastern Time. As I always say, none of this happens without Martin Runford. My name is Michael Waits. Bye for now.